Like the video, help me out. It helps the video circulate around the internet. It's free, and think of it as a tip. It just helps the channel for producing the content to actually get more views. So, Sam Bankman-Fried's Alameda research troubles predate FTX. So there's an article today that basically says there were troubles and bubbles before FTX. So let's see what they have to say. So new reports into Sam Bankman-Fried and his collapsed exchanges revealed that Alameda Research, a now bankrupt crypto trading firm, almost collapsed in 2018. So it looks like there was trouble before the bubble, even before FTX was in the picture. A report published in the Wall Street Journal citing former employee revealed that Alameda incurred heavy losses from its trading algorithm. The algorithm was designed to make a large number of automated and fast trades. However, the firm was losing money by guessing the wrong way about price movements. So obviously, if you guess the wrong way about price movements, it's probably not going to make the crowd go wild in a good way, right? In 2018, Alameda lost nearly two-thirds of its assets due to the price fall of the XRP token and was in a blink of a collapse. However, Bankman-Fried reportedly managed to rescue the trading firm by raising funds from lenders and investors on a promise of returns of up to 20% on their investment. So it looks like he was promising big returns before anything ever happened with FTX, and it's interesting that he was still able to parlay his activities to the level that they got to, even with this going on prior. As per the report in January 2019, Alameda sponsored the inaugural Binance Blockchain Week conference, and SBF used the event to get in touch with investors to get funding for his Alameda trading firm. Later in 2019, FTX was launched with a promise to offer a safe haven for institutional investors. With the launch of FTX, Bankman-Fried used Alameda to fuel its growth as the trading company became the major market maker for the exchange. It was always open for other traders to purchase from and sell to. People familiar with Alameda's tactics claimed that the exchange occasionally adopted the losing side of a deal to draw clients. So what does that mean? They covered the loss? While Bankman-Fried had claimed earlier that Alameda and FTX has always operated independently, the recent lawsuit by the United States Securities and Exchange Commission suggests otherwise. The lawsuit revealed that Bankman-Fried instructed to create a piece of code to gain an unfair advantage. The code would let the Alameda maintain a negative balance on FTX regardless of the amount of collateral, and wouldn't immediately be sold if its value dropped below a particular threshold. The recent report established that Alameda was a sinking ship from its early days. However, Bankman-Fried not just rescued it in 2018 with the borrowed funds, but later used it to create the now collapsed FTX crypto and fuel its growth. See, the thing is with new industries, I take that back. I'm not that surprised because you can get away with murder because unfortunately the problem, the mistake, and one of the problems that the powers that be have is that they're asleep on new technologies or new industries. So when something new starts, a new industry, people can get away with murder because they're not under that microscope. They're not being watched the way a regulated industry would be, or an industry that's becoming known, that's about to be on the cusp of regulation and stiffer laws. And that's when the craziest of things tend to happen. So what I also wanted to talk about here is we have 3 reasons why Bitcoin is likely heading below 16,000. Now, I don't know. I mean, it's always possible for things to go lower, obviously. I don't see that happening unless there's some other major explosions that occur, which is quite possible, but I don't know. My gut just says that again, just my opinion, I think we're near the bottom. The worst that happens is we see 10K, but I'm starting to think that's not going to be. But who knows? So 3 reasons why Bitcoin is likely heading below 16,000. December will likely be remembered by Bitcoin's BTC fake breakout above 18,000, but apart, the battery died, thus the edit. So after that brief overshoot, its trajectory was entirely bearish. In fact, the downward trend that currently offers an 18,850 resistance could bring the BTC price below 16,000 by mid-January. So a handful of reasons can explain The negative movement, including the report withdrawal of the Mazars Group auditing firm from the cryptocurrency sector on December 16th. The company previously handled proof of reserve audit services for Binance, Qcoin, and Crypto.com. So they're not clowns, you think, it seems. Additionally, can never be too sure these days, right? Additionally, one point to the bankruptcy of Core Scientific, one of the largest cryptocurrency miners in the United States, Core Scientific, the publicly listed company filed for Chapter 11 bankruptcy on December 21st due to rising energy costs, increasing competition, and the Bitcoin price crash in 2020. The liquidity crisis at the crypto lender and trading desk Genesis Global and its parent company, Digital Currency Group, DCG, sparked fear among investors. More importantly, DCG manages the $10.5 billion Grayscale Bitcoin Investment Trust. The fund is currently trading at a 47% discount. Its net asset value is part due to investor speculation on its exposure to Genesis Global. Negative pressure from the U.S. Federal Reserve tightening movement. Apart from the bearish news flows, the macroeconomic scenario deteriorated after the U.S. Federal Reserve hiked interest rates by 50 basis points back on December 14th. Analysts, including Jim Bianco, head of institutional research firm Bianco Research, said that the Monetary Authority would maintain its tightening policy in 2023. Investors fear that Bitcoin could break below the 16,100, triggering a sharp correction. The cryptologist, a veteran crypto trader, pointed out a descending wedge potentially causing a $14,000 low by February 2023. The 3-month futures annualized premium should trade between 4 to 8% in healthy markets to cover costs and associated risks. So look, it's getting a little boring here with this video, so I'll say this. There's going to be probably other explosions. Is the bottom already factored in because the market is not stupid and the market, given, FTX exploding and all the danger that surrounded the industry in the last few months, have they factored in the bottom for the next few months? And is that part of the price movements that we've seen? In other words, does the market recognize it's a given that there's going to be more catastrophes and the bottom is already in? I think that might be the case. Or is it just waiting and are there going to be more collapses? Who knows? But the fact of the matter is, obviously, anybody can tell you're better off now if you were deciding to do something, provided the market doesn't go to zero. You're better off now than picking up some Bitcoin at 40, 50, 60,000 if that's what was on your menu, right? So what I do like, and I have been mentioning this on and off in the videos, Tron TRX has not been vaporized. BTT is still there. There's so many things that have been erased from the crypto sphere. I think we should all be encouraged, and I think we should all be feeling good that there has not been some type of explosion with Binance yet that takes down Tron TRX because of their relationship, and BTT in turn. So they're holding strong, and that's good. Thanks for watching. I will see you on the next one.